So since I predicted a stock market crash, everything has crashed. Bitcoin is down to 67,000. Metals are down. Everything is down. And not only was this from silver blowing up, but this week people are figuring out that AI is going to destroy other companies. And there could be like a SaaS apocalypse. This realization came after a company named Anthropic created AI tools for lawyers, which caused legal tech stocks to plummet, and then everything else fell after that. So AI is a giant threat to tech. But there's an even bigger problem looming in the shadows that few people are talking about. And that's the potential for private credit crisis. And one of the black swans of 2026 that I'm making a whole series about. To back up, private credit is basically loans made outside the banking system. So think private equity, venture capital, big asset managers like BlackRock. They are funded by rich people and big institutional investors like insurance companies, pensions, etc. And companies use private credit as a way to get funding with less restrictions. So if you go to a bank, you're going to want to see revenue. You want to see that they're going to pay you back, and they have rules around this. But with private credit, it's flexible, and the lender can decide the level of risk. They might give out money to companies that aren't even making money at all. They're just like, please, boys, try to make money. If not, we got other companies that are going to make us billionaires anyways. Who cares? In the US alone, private credit is over $1 trillion, and 40% of that lies with tech. And here's the bigger problem. A report came out this week that 14% of these tech loans in private credit are high risk of default. Now, if these private creditors start to default, well, they're gonna have a tough time raising more money from these rich people and institutions. And then credit just starts to dry up and companies can't get the funding they need. For AI to grow at the level it's currently projected at, that would require a massive amount of private credit. And even these major companies like Google, who are cash machines, now have a tremendous amount of capital requirements to grow. So if there's a wave of defaults, then private credit lending goes dry, then there's less lending, then AI is low, then the SaaS companies can't even get the funding they need to build their own AI products, so they'll just fail. And then the dominoes fall into the greater economy with layoffs, contracted growth, recession, what have you. So what can be done? There aren't a lot of options. The government can't bail out private credit the same way they can bail out banks. They can flood the market with liquidity, which they're already doing. They can force restructuring of these loans. They can just also accept that a large portion of these creditors and companies are going to default, which is going to be the case. Now, this won't be a flip of the switch. Everything is going to fall right now. It's a slow progress of what happens, what's developed. And the key questions are, can these SaaS companies develop their own AI tools? Can they get the funding to do so? We'll find out. Stay tuned.